Good day, everyone. Well, as we know, the Fed's track record on inflation has been anything but super. He was dead wrong when he said he expected inflation to drop in July of 2021 after an unprecedented amount of quantitative easing that began in March 2020 due to COVID. Then he was actually surprised in June 2022 when inflation kept coming in hot. Meanwhile, we had advised members as early as November 2021 that the Fed had changed their tune about QE, so tightening lay ahead. Two narratives clash over a rate cut, each with different takes on recent economic data. So on the one side, we see the bulls who are seeing enough signals flashing red. There's GDP crawling forward at just 1.2%, consumer spending losing momentum, payroll growth stalled. And to them, the 4.2% unemployment rate masks real fragility. With core inflation dropping toward 2.5%, they argue the Fed is now running the risk of breaking the labor market further and locking housing affordability into crisis mode. And these advocates want an immediate move, arguing that it will give equities and housing some relief, with room to step back if inflation rears up again. The bears, meanwhile, aren't buying it. They warn that any easing could spark a rebound in inflation, pointing to July's jump in producer prices and the sticky services costs. While job growth remains rather limp, they say the labor market still looks robust by historical standards, and slower growth isn't synonymous with weakness. Instead, they highlight structural risks the Fed can't ignore, such as persistent fiscal deficits, inflation asset prices. That's the inflated asset prices that just keep going higher, and questionable valuations. And for them, higher rates are the anchor against instability. If you cut rates too soon, they see a replay of past mistakes, such as stoking bubbles, undermining credibility, and risking another bout of runaway inflation. But one key metric favors the bulls, and that's global liquidity. With the US and China pumping QE into the ecosystem, markets should continue to head higher overall, with the occasional 3 steps forward, 2 steps back. For example, after Trump shocked markets in early April of this year with far steeper tariff proposals, markets mini crashed, but then quickly shot to new highs over the ensuing weeks. Global liquidity played a major role. Now, Financial Conditions Index, it's an index that measures the M2 money supply, central bank operations, bond yields, commodity prices, and institutional capital flows, which indirectly measures global liquidity. And it's currently been showing loose conditions. And this index also correlates well with the S&P 500 and with Bitcoin. So it's telegraphing that the markets should continue an uptrend. We also see the ISM manufacturing PMI, that's Purchasing Managers Index, and it's not showing the clean cycles that we have seen in prior years, and that makes it difficult to assess exactly where we are in the business cycle. Now, this continued in its most recent print with a disappointing 48, meaning the manufacturing sector is still in contraction since it is below 50. But regional Fed manufacturing surveys and industrial production both suggest a higher ISM ahead. And we also have the Global Economy Index, the GEI, which tracks currencies, bond yields, commodity prices, and freight rates. And that's also showing continued strength in Bitcoin and thus likely stocks. Given that the markets are betting that lower rates are coming in September and also potentially later this year, given the text replacement the recent Fed statement had, where basically they removed in their text the 2% rate of inflation target, and that's the rate, of course, they've been talking about all along, and they've replaced this 2% rate with, quote, the committee is prepared to act forcefully to ensure that longer-term inflation expectations remain well anchored, unquote. So that's a pretty substantial change from the past year. So I think they're obviously buying themselves some wiggle room with that change in text. Now, given the above, Bitcoin's bull still has a bit to go before it tops on the basis of a number of things. But keep in mind that September tends to be one of the weakest months for Bitcoin. It also tends to be weak for stocks as well, seasonally speaking. But that said, if we look at the 30-peak market indicators for Bitcoin, these are the indicators that in the past cycles, they get hit when Bitcoin is undergoing a climax top. So far, none of these things have been hit. And we also see a significant shift in Bitcoin's ecosystem post the 2024 halving. So for the first time, the amount of Bitcoin held for 10 years or longer is growing faster than new coins are mined. So an average of 566 Bitcoin a day are moving into this long-term category compared to 450 new Bitcoin issued daily from mining. So that signals strong conviction from these long-term holders. Gil, how are you seeing everything?
Well, Bitcoin's been a short since it double topped 3 weeks ago. So, I mean, aside from that, I don't really have anything to say. But other than that, if you're looking, you might look for an undercut and rally of this low here. So far, it doesn't seem to want to happen. I got to say, though, the thing that bothers me about Bitcoin is like, here's something that allegedly was going to free us from the shackles of corrupt governments. And yet now it seems to rely on the involvement of corrupt governments in order to go higher. Somehow I think there's something existentially wrong there, but I suppose we'll see. But for now, technically, the thing is short. It could come all the way down to the 200-day line, depending on how things go. I think the Fed is definitely going to lower rates. There's rumors that they'll lower them 50 basis points, but what is it that Powell saw when he towed a dovish line on Friday? He's basically talking about how employment is slowing down, and it is. There's plenty of data. I mean, forget the government data. That's garbage, and we know that because it takes them many, many years of revisions before they can finally tell you what happened in year, XYZ. So I think there was a lot of talk in 2007, 2008 that, oh, the economy's fine. Bernanke was assuring everyone that. And later we find several years later, we were already moving into recession in late 2007. So the data isn't reliable in real time. We get some more tomorrow morning. So I don't really look at that. I think if the Fed thinks they need to start lowering rates, the market's going to sell off. That's my take. And I think the AI meme theme is probably overdone at this point, overbuilt, and we'll get a good sense of that today when NVDA reports earnings. So nothing. You can have whatever opinion you want, but I think the litmus test will occur after NVIDIA reports. Let's see. With respect to interest rates, let me pull up something here. Give me a second. You can see that the short-term rates are coming down fast because that's what the Fed controls. But if we look at 10-year yields, kind of hanging out. And the other thing that's interesting is if you go back to when the Fed lowered rates a full 1% between September here, let me get a dark pen here, here in September to the end of the year. And then the market topped right after that. So some of that could have been exogenous due to Trump tariffs, but they can't control the longer end of the curve. So we'll see how this plays out. And that's really what figures into the economy, because mortgage rates are pegged or they're not pegged to the 10-year, but they're benchmarked to the 10-year. I think it's a 10-year plus 150 bips, something like that. But, the mortgage industry has had, 9 straight down quarters. And I think the last quarter they had a little dead cat bounce. We'll see how that plays out. but I don't necessarily buy into any idea that the Fed is going to lower rates and everything's going to be hunky-dory. So for me, the most coherent way to play the market right now has been to be long the precious metal space. I mean, pretty simple. I've been long miners for the last, even before Powell spoke on Friday, but these have been coming up for a while, and you have a lot of strong uptrends in the space. Agnico, today we get a little pullback. This is probably one of the slower names, but it's a big cap favorite. Alamos Gold has been running for the last few days. Aris Mining has been running for the last few days. Anglo Gold Ashanti looks viable here. Volume's drying up along the 10-day line. I actually did buy some of this off the 10-day line earlier. Barrick working on, this would make it 17 out of 20 days. I'm sorry. It's 16 out of 19. If it's down today, then it'll make it 16 out of 20. If we're up again, it'll be 17 out of 20. So we'll see how that goes. But that's another big stock institutional favorite. And look at that move. It's huge. And that's over the last month, roughly. B2 Gold also, Eldorado Gold moving higher. Equinox Gold, this is one of my biggest positions in the space. I was actually working this much lower in the pattern, and I held a little tiny bit of it when they announced earnings, but the next morning I just loaded the boat or loaded the CAT 798 AC mining truck, and it took off, and I'm still on. So, and this looks like it wants to go a fair bit higher. Fortuna, nice move off of the 10-day line today. So they brought him in this morning, support right at the moving average. Gold is hanging tight. It's now in an 18-week plus base and looks to me like it's ready to break out. Harmony Gold, they pre-announced earnings yesterday, or I'm sorry, the day before in the afternoon or evening. And at the same time, their formal earnings report is tomorrow. So, that doesn't do anyone any good because knocked it down to the 50-day line. That's so, if you can't come through with the earnings and the production and the cash flow, they whack you. But most gold companies, gold miners and silver miners are doing exactly that. And that's why the group has continued to lead. Kinross, another one moving higher. McEwen, this is a hybrid, right, with copper and pulling into the 10-day line. Volume is drawing up, but not terribly. So here's Newmont, another big stock favorite, pulling in slightly, but it looks fine. Nova Gold has been working pretty well since it posted a pocket pivot at the 10-day line 5 days ago, I think it was. Actually 3 days ago, and then a 5-day pocket pivot, I think, or maybe that was a full 10-day pocket pivot last Friday. New Gold has just been on a tear. I think I've talked about these during the webinars. This is one I thought was, I don't know what was going on after the earnings report because it looked very strong to me, and that would have been this day here when it actually bottomed. But that was a day when gold was down, I think, like 3% or something. So it kind of got swept up in the downside melee. In any case, this continues to move higher. So, these are the stocks that I'm long, and they're working. And I don't really have to think about it. Here's another one. I bought the Bible Gap up here. That was a month ago, and it's still going, SSR Mining. If you look at silvers, a lot of these are in better long entry positions. I like First Majestic here. I bought some off the 20-day line this morning. It's pushing higher. But, I mean, they take it all the way down to, 870 something, and right to the 10, 20-day line, you got to come in and step in. Silver has been, it's being considered now formally for I think the strategic metals list that the government has. And I saw some interesting analysis that when lithium was added to that list, it had a 7-fold move. And what was the other metal that was added? And it had uranium, and it went from like $20 a pound to $100 a pound, something like that. So you had huge moves. So I wonder what happens to all the big banks that are short silver if that happens. But these metals are just sitting there. So I'm happy to accumulate here unless I'm stopped out, obviously. Endeavor Silver pulls into the 10-day line. That's a long entry. Hecla Mining, same thing. I'm long that. And you can see that had a Bible Gap up and it's edged higher. Mag Silver is being bought by Pan American Silver. Both of those have been making higher highs. Other than that, I'm not interested in buying tired old chip stocks and AI meme names and all that, except the only one I like is the one that we've been talking about, and that's primarily because most of these AI meme theme stocks they're trading at absurd PE expansions. So I suppose they can be justified if rates come down. But if you look at Iron, for example, which is they're giving up or moving their focus away from crypto mining to data center infrastructure and basically with renewable energy. So, but they're at 18 times forward estimates. So unlike these other names in the space, they're not wildly overvalued. And so we've liked this one, and it's worked. It's worked well, and that's the only one I want to be long. Elsewhere, though, stuff that I was looking at this morning, you got Applied Optoelectronics is hanging tight along the 50-day line. It was almost, well, it was looking like it might post a pocket pivot earlier this morning, but that's kind of faded. That said, it is holding the line. If it reverses, then it could become a short, obviously. First Majestic, I talked about that. This is a new IPO. They're in aerospace, defense. I would check it out. Go to their website, Aero Group, new IPO, Voodoo volume at the 10 and the 20. So that looks viable using the 10 and or the 20, or the 10 or the 20 as your selling guide. They're pretty much roughly the same. Amazon is posting Voodoo at the 10-day line, so that looks interesting. There's Angle Gold again. Camco, the uraniums, okay, whenever you're dealing with these metals, precious metals, industrial metals, you have to be opportunistic. So you're looking for these opportunistic entries. You get pullbacks, you want to come in there. You don't want to chase strength. So oddly enough, you had a price undercut and rally last Thursday in Camco through this low. And then it gapped higher on Friday and then through the 50-day line. Now you're hanging along the line. Volume is down to 57.7% below average. That's a Voodoo pullback. So that looks like something potentially viable using the 50-day line as a selling guide. Now, if it breaks the 50-day line, then you just puke it, right? I'm also watching. One of the theories I have is that if we don't see the market sell off, you could see money moving out of the AI meme techs and flowing into other areas where PE expansions have not been so high and where you don't have the potential for AI overbuild to slow down business. We'll find out more, obviously, and I think it's critical for the space is NVDA earnings. But I look for a potential rotation, and if we're getting inflation, I think the Fed is going to surrender to inflation because central banks will tend to do that. Prop up the economy and surrender to inflation. And I think that's positive for commodities, likely, definitely for gold and silver. And that's why that space has been acting so well, in my view. And that's what it sees. Stagflation, basically. So, Albemarle, lithiums have come to life recently. This is trying to post a pocket pivot at the 10-day line. Alcoa, the aluminums have come back to life. You see Alcoa with the big move after Powell spoke on Friday. Nice little pullback to the 10-day line. Looks like it's setting up. There's Camco again. Century Aluminum pulled in. This is a U.S.-based aluminum company, but notice how you're getting the little shakeout at the 20-day line. So, I've got these on my radar. Commercial metals had a nice pocket pivot here last Friday. Now you're just edging into the 10-day line. I think you're pretty much right at it. Volume is running 62% below average, and you are 0.17% above the 10-day line. So that's a Voodoo pullback into the 10-day line. Euro Copper, this is a Brazilian copper name. They got hit when they reported earnings and they sucked, and also the fact that I think Trump is all over them with tariffs because they prosecute, former leader. Freeport coming into the 50-day line. That looks interesting. You see the global Global X Copper Miners ETF broke out on Friday, and it's holding that breakout. Now, why is it leading all of the copper miners that trade in the U.S.? Well, because it has components that are trade in other exchanges. So some Canadian names like I'm trying to remember Fremont or something like that is one of the names. That's a big copper miner, and then you have Antofagasta down in Argentina. So that trades on the London Stock Exchange. Here's Hudbay pulling down, volumes drying up. So these are on my radar, looking for optimal entry. Some of these were viable last week. MP Materials Nice voodoo pullback into the 20-day line. That's another company that the government took a stake in, which I think is absurd. I don't see why the government needs to take taxpayer money and start putting it into stocks and companies, especially crappy ones. Now, rare earth materials, I guess there's a rationale there, but Intel is a crappy old decrepit chip company, poorly managed, and now selling at 178 times forward estimates. Where are we at now? 2470. So I actually shorted this the other day at above 2550, and then it rolled over, bouncing up the 10-day line. I'll get to that in a second. But MP looks interesting. Ramaco Resources should also be watched, but that needs to pull in. And so this is what I'm looking at primarily. Southern Copper pulling in, voodoo pullback into the 10-day, 200-day line. It's below the 50, but that could be potentially viable if the group is able to set up. I don't know if copper has been added to the list of strategic metals yet, but I bet you it will be. Tech, big pocket pivot on Friday, and now you got a voodoo pullback coming into the 10-day line. So anyways, that's those are the names that I like. If I'm looking at Intel, coming into the 10-day line, if you think that the U.S. government getting involved with Intel, taking a roughly 10% stake through stock and warrants and whatnot, then I guess you could buy it here and see what happens. I hear the fast money crowd the other day. I was watching that show just for a few minutes, but long enough to hear them say that Intel can go to 35, which would make it 300 times forward estimates. I don't really see what the government's involvement here is going to do, other than it's just a different type of bailout, and I think that's really all it is. But why do they need to bail out companies to begin with? Let them die. Get them out of the way. There are new companies with better products that should be taking over. And so, it interrupts the virtuous cycle of creation and destruction. That's kind of the hallmark of the U.S. economy, and by inference, the stock market as well. So that's how I'm looking at it. Anyways, that's what I'm doing. And also I am long UVXY. I did scalp the SOXS earlier. Got about 20 cents off of that. We pop over here, and you can see the indexes are acting okay. So from an index standpoint, things look fine. But you can see the UVXY, you had a signal in here. I mean, right around 1185, so it's hanging out. Nothing much. What I like about this is, let's say the market poops out suddenly. This tends to not come down very fast, at least at these very low levels. And so it's not as susceptible to, say, the SOXS, which actually had a long entry this morning, pre-open. And that's where I got long, right here, just above 660. I think 667 was my entry. Ran up, and then I figured just blow it out because I'll take the profit, and I don't really want to have to be committed to anything one way or the other when NVDA reports earnings. I'll react to it when it comes out. So anyways, that's my take. Got anything else, Chris?
Yeah, I'll just leave with that, as we know, Bitcoin was created specifically to function without reliance on central authorities or government control. It uses cryptography and P2P tech, and so it's been censorship resistant and borderless. So we've got these regulated products like spot ETFs on Bitcoin, and the government can use these vehicles to buy, and I think they're seeing Bitcoin as, if you can't beat them, join them. But that said, shorter term, as we can see in the chart, Bitcoin remains in a correction. And as I said earlier, September is a traditionally weaker month for Bitcoin. So let's see how it all unfolds. Stay tuned.
Yep, stay tuned. Anyways, we'll catch you guys next week. Have a great trading day, and take care.
So long, everyone.